There's an old saying for corporate bond investors: it's like picking up pennies in front of a steamroller. The pennies, or steady with coupon returns, keep on coming, but one slip and the damage can be painful. Right now this situation is even more relevant. Global central banks have been pumping money into markets for the last few years. Asset prices have inflated. For example, today we have around $9 trillion worth of bonds with negative yields. But this insanity will not last forever. Already the US Fed has stopped buying bonds. They're due to announce plans of slow reinvesting, and the ECB, Europe's central bank, is looking to follow soon. So what we've got is a slowing of investing into assets around the world. This is then going to cease, and then they're going to reverse. And as this happens, there's a high risk of a large correction in asset prices. Fixed income investors consider themselves to be rational. Corporate bond investors like ourselves consider themselves to be conservative. So given this and the elevated asset prices around the world, how can we, Spectrum and other corporate bond investors, continue to justify to invest in corporate bonds? Well, the first reason is that we invest in floating rate notes. We avoid the main investments that central banks around the world invest in, that is fixed rate bonds. Second thing is, default rates around the world are low and it continue to get even lower. Default rates in Australia are almost non-existent. So given that we invest in floating rate notes which give you steady returns with not much price fluctuations, and the corporate health of what we invest in looks solid, you're likely to get steady returns over the coming 12 months. So most assets have boomed in values over recent years. And today we've got a question of really not is the most attractive assets out there, because most look a little bit expensive. It's really what looks the least ugly. Now in our space, corporate bonds, yes, the returns are likely to be a little bit less than what we've seen in the past, but the volatility is likely to be low, returns reasonable, and certainly on our expectations better than what you can get in bank term deposits. So compared to many other asset classes out there, Australian dollar corporate floating rate notes look a relatively attractive risk-reward trade. For any more information on this or on Spectrum, please go to our website spectruminvest.com.